the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're tuning in to Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take you through the biggest movers, sectors, and of course, the companies to watch. But as always, a quick recap of some key movements for today. Well, Singapore shares nudged higher today despite fluctuations in Asia. So if you look at the Straits Times Index, it was up 0.09% at 3,922 points at about 11:50 a.m. Singapore time, with a value turnover of some 521 million Sing dollars seen in the broader market. Now let's take you through the closing numbers. The STI ended in the green as well, up 0.08% at 3,922 points. Now in terms of value turnover, we are looking at 1.2 billion Sing dollars. Gainers trailed losers though, 236 versus 252. Top advances for today, we've got for you GMXUSD, SGX and Ascend and top decliners we have here Fuji Offset, Asus and DBS. Well, in terms of counters to watch for today, we have CapitaLand Investment. Now, why so? Because the manager of CapitaLand China Trust today proposed the establishment and the listing of a publicly traded infrastructure securities investment fund called CapitaLand Commercial C-Reit on the Shanghai Stock Exchange. Now, elsewhere from U.S. President Donald Trump's threats to impose unilateral tariffs on partners in the next 2 weeks to Grab announcing an upsize of its 5-year convertible note, we've got more corporate and international headlines in focus. And joining me on a Thursday is David Chow, Director at Azure Capital. David, welcome.
Hi, Tian. Hi, everyone. Good evening.
Good evening. And David, let's start with global news this time around. I really thought tariff talks are going to subside after, US and China agreed on that framework to work towards a trade pact. But yet, US President Donald Trump, he said he would impose unilateral tariffs on partners in the next 2 weeks. How would you read into Trump's latest tariff salvo, and how seriously did Asian investors take his words then?
I get concerns. Knowing Trump, he wouldn't be who he is. He's simply negotiating with him, say in London for a few days, actually works. I would say that this latest threat, appears to be a continuation of his aggressive trade policy, which leverages tariff as both an economic tool and also a negotiating tactic. So, while this recent US-China framework agreement actually toned down a bit of tensions, it might not have yielded the specific concessions Trump is seeking, and hence has actually prompted him to reassert pressure on China and, other partners. And I think his trade policy is still very much aligned with his campaign promises to address trade deficit and, protect American industries. And by doubling down on unilateral tariffs, he actually reinforces his image as a tough, negotiator to his domestic base, especially after criticism, like the taco, label, from certain newspaper. So his insistence on tariffs as, not good enough for the U.S. economy, and also actually suggests he's prioritizing long-term strategic goals over short-term, market stability. At the same time, we must, as we look at, stuff like that, we must also dive deeper and try to understand that the tariff may also be a response to, shifting regional dynamics. China's efforts to position itself as a defender of global trade, as seen in President Xi's statement in Hanoi and, ASEAN engagement, could also be prompting, Trump to counter, China's growing influence in this part of the world. And, by targeting Asian partners, I think he may also aim to disrupt their increasing economic alignment with China, though, this risks putting them, closer to Beijing, geopolitically.
Okay. Now, going back to the Singapore stock market, though, David, how did the STI, how far did it track regional movements today, and any surprises when it comes down to the biggest movers and, of course, the sectors that they lie in?
I think if I look at it, I think STI closed flattish today, and if I measure it against the MSCI APEX 50, for this MSCI APEX 50 actually fell 0.82%. So for that comparison alone, I would say STI is relatively resilient. And looking at some of the component stocks, I guess, and in other sectors, component stocks as well as on a sector basis, I guess we see a little bit of rotation back to local tech players today, the likes of venture, AEM and UMS, gaining, versus the banks and other STI constituents like the properties today.
Okay. Now, zooming in on some of the counters to watch, David, we've got here CapitaLand Investment, because the manager of CapitaLand China Trust, which is a subsidiary of CapitaLand Investment, today it proposed the establishment and the listing of a publicly traded infrastructure securities investment fund, and that is called CapitaLand Commercial C-Reit, and that is on the Shanghai Stock Exchange. I believe this news isn't quite new, so to speak, but what implications will this have on CapitaLand Investment, and how far has this been priced into CapitaLand Investment's share price today?
Right, I believe we first heard about this sometime in mid-April, and I seem to recall you speaking about it. And, a bit on the background, I think this initial portfolio will, of course, be seeded by the sponsor group and focus on operating assets, and I think it comes with a total valuation of about renminbi 2.8 billion. And CLI, together with CapitaLand China Trust and CapitaLand Development, they will collectively hold a minimum 20% in this new REIT. And again, CapitaLand, the parent company, will continue to operate these assets, post listings. I guess if you ask me, I think investors should be feeling assured that CapitaLand will continue to see growth of its overall fund management platform. We see the group being able to create a perpetual capital platform in China and tapping on a new group of onshore investors, hopefully. For CLCT, which is the current trust in China, we see this newly listed REIT up and coming one as an alternative path of growth, potentially as a vehicle, leveraging on the broader ecosystem. I understand that while investors may question the overlap in mandate, CLCT will actually be a suitable entry point for international money trying to get exposure to the parents company China REIT platform at potentially higher yield spreads. And I would say the successful growth of this ecosystem could help compress yield spread differential between CLCT and this upcoming REIT over time. And alternatively, if CLCT continues to trade at a significant discount to book, market could start to question on the viability of CLCT and question on whether privatization will make sense. So this theme you could see coming back again. And looking at both the share prices of the parent company CLI and I think CLCT is both slightly down today, so not much excitement. I think this news has largely been priced in.
I wonder if there's any excitement if we talk about ramen, because this other company that we want to watch is Aspen. And Aspen announced that it will be shutting its Kanadaya ramen chain as subsidiaries are unable to pay debts. And the decision, of course, follows continued losses amid high operating cost, weak consumer demand, and reduced support from the franchisor. Now, any thoughts on the move?
I think if I look at F&B operators like BreadTalk, Koufu, and R&S, they actually delisted in the last few years as their share price actually underperformed in a challenging operational landscape with increasing costs and intensifying competition. So for this trend, of course, it's still ongoing, and we expect this trend to continue. When we dive into the cost structure of F&B operators, we see that labor costs actually constitute about 30% of sales, have actually surged due to tighter foreign labor policies as well as local labor shortages and of course overall rising living costs. And based on our tracking, we find that the total wages for F&B workers have also risen by close to 35 to 40% over the past decade, while revenue per store has sort of stagnated. So underscoring the need to really optimize your manpower. I mean, some of the F&B players are adopting measures such as yakiniku, cook your own meat concept, and also implement self-ordering system. Interestingly, I was at Japan Foods holding analyst briefing a few weeks ago. For the full year, FY25, their revenue fell 3.2%, and net losses actually widened from negative 0.5 million, I think, in FY24 to a loss of 7.9 million in FY25. So one interesting topic that we dwelt on at the Japan Food meeting was the competition brought forth by the lean, hungry, and cash-rich Chinese F&B operators. And for that, we also see supermarkets and convenience stores are also expanding into the F&B services, like your Scarlet supermarket at Westgate, offering ready-to-eat offerings and things like that. So to stay competitive and profitable, we believe local players would really have to intensify efforts towards cost optimizations and promotions.
I see. Well, if you're just tuning in, we're now in conversation with David Chow, Director at Azure Capital. Well, David, and more corporate news, right? Grab announced today that its 5-year convertible note offering has been upsized from $1.25 billion to $1.5 billion. Now, the initial conversion rate of the notes will be 152.6 Class A ordinary shares for every $1,000 principal amount. Now, a lot of numbers in here. Could you unpack the news for us and also what the news mean for investors of Grab?
I think with this you could surely hear the ka-ching, sound loud and clear with this upsize, which actually aims to strengthen Grab's cash liquidity at about 6.2 billion currently, and potentially rating it for a merger or takeover deal with Indonesia's GoTo. That Grab has denied in a recent filing. So, if you recall, the supposed terms of this merger, Grab, has proposed, a 7 billion all-stock acquisition of GoTo's Indonesia and Singapore operation, excluding its fintech portion. Mm-hmm. So, we see that, if this were to, there's a big hurdle, before this move can actually be completed. The chances of regulatory approval seems very low, as the combined entity will have about, I think, 65% of Southeast Asia on-demand services.
Wow.
And in our view, while this oversight is expected, we still believe it would regulators will focus on ensuring fair competition rather than obstructing the deal. So in the long run, if this is to happen, a more rational market structure could support, I would say, sustainable pricing strategies, which will ultimately benefit both companies' profitability and long-term growth. As such, this move alone should be seen as a positive by investors of Grab, but we will have to stay tuned.
I see. And finally, before we let you go, David, Meta has reportedly poached top engineers from multiple tech firms, including from Alphabet's Google, for a new team focused on achieving a more advanced form of AI, which is called Artificial General Intelligence, AGI. How would you read into the news? And is Meta now taking a more serious stance to acquire AI talent and resources from outside? Also, say in the case of Scale AI.
Okay. I think this signals a clear and aggressive shift towards prioritizing artificial general intelligence development for start. From the recruitment of individuals like Jack Wei, who is a principal researcher from Google DeepMind, and Johan Chokre, which again is a machine leader from Sesame AI, indicates Meta is really targeting specialized high caliber talent with I think deep expertise in AI research and development. So these are not just rank and file engineers, but key figures in their respective fields. And it suggests Meta is really aiming to build a world-class AGI team. And we also have reports I think of Mark Zuckerberg personally meeting with AI researchers at his homes to underscore hands-on founder mode approach. So I think this level of CEO engagement is could be seen as unusual and signals that AGI is really a top priority for Meta. So so if you look at Scale AI, I think this is also a significant move, not to secure just talent but also critical resources, because I think Scale AI actually specializes in data labeling and cleaning, which are essential for training complex AI models. So you could see these Meta's ambitions in going all out.
A quick one though, do you think that Mark Zuckerberg and Meta has been late into the game in terms of investing in external AI players, given how, we've seen Microsoft with OpenAI and so on and so forth, some other companies with Anthropic?
Yes, we actually see that they could be a laggard in this development, and it's been reflected in their share prices as well, versus that of, its competitors, such as Google. So, as you see from recent actions, they are really, going all out.
Catch up.
So, catch up, So, but this catch up will probably take some time. So, I guess in future earnings, quarterly briefings, analysts will be definitely questioning them, on the progress of all these acquisitions.
I see. Thanks so much for the insights, David. That was David Chow, Director at Azure Capital. Thank you so much for joining us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.